Sector momentum, stress points, and correlation triggers. Macro backdrop, the field you're fighting on. Rates cooling, 10-year at 4.66%, easing pressure on growth stocks. Volatility down, VIX 14.9, lowest in weeks, cleaner entries. Tech leadership, NASDAQ plus 1.3%, strongest index. Energy softening, WTI around 77 sovereigns, down sharply. AI earnings, bifurcation. Software rewarded, infrastructure punished. This creates a risk-on but selective environment. Sector tactical grid. Below is your sector-by-sector map, with momentum, risk gates, and correlation triggers. 1. Technology, high momentum zone. Momentum, strong drivers. AI monetization, cooling yields, chip strength, stress points. Overbought conditions in mega-cap AI. Key signals, NVIDIA strength equals broad tech lift. AMD weakness equals infrastructure overspend. Fear, software. AI earnings equals upside catalyst. Argon, read. Tech is the primary momentum corridor this week. Expect continuation unless yields spike. 2. Semiconductors, momentum with volatility. Momentum. Very strong drivers. Chip index plus 9% weekly. Optical communications boom. Stress points. CapEx blowouts. SpaceX, 16 billion AI spend. Key signals. Coherent, plus 40% weekly, equals optical supercycle. NVIDIA, chosen as sole supplier equals ecosystem consolidation. Argon, read. Chips remain the engine room of the rally. Watch for sharp pullbacks, but trend remains intact. 3. Consumer discretionary, moderate upside. Momentum, X, drivers. Amazon strength, cooling inflation. Stress points, rate sensitivity. Key signals, Amazon, plus 0.82% equals stable leadership. Tesla, plus 2.83% equals EV sentiment rebound. Argon, read. Selective strength, follow leaders, avoid laggards. 4. Financials, stable, but watch yields. Momentum, neutral drivers, lower yields. Help banks, stress points. Credit tightening, key signals. Treasury yield drop, equals supportive. VIX, drop, equals better liquidity. Argon, read. Financials are not a momentum play, but they stabilize the market. 5. Energy, weak. Reversal watch. Momentum, V. Weak drivers. Oil down. 8% weekly. Hormuz tension easing. Stress points. Supply overhang. Key signals. WTI, $77 equals bearish. Geopolitical cooling equal less upside. Argon, read. Energy is in a cooling phase. Avoid chasing until oil stabilizes. 6. Materials, cooling but still elevated. Momentum, Sage, V. Mixed drivers. Copper off highs, but still strong. Stress points. China, demand uncertainty. Key signals. Copper, multi-week, uptrend. Gold rebounding. 7%. Argon, read. Materials are not leading, but remain structurally strong. 7. Healthcare, defensive zone. Momentum, neutral. Drivers, lower volatility. Stress points. Policy noise. Key signals. VIX drop, equals less defensive rotation. Argon, read. Healthcare is a stability play, not a momentum corridor. 8. Real estate, rate sensitive. Momentum, weak drivers, high mortgage rates, stress points, yield curve. Key signals, 10-year at 4.66% equals still elevated. Argon, read, avoid until yields drop further. Cross-sector correlation triggers. These are the argon gates that determine how sectors move together. 1. Tech. Yields. If yields fall, tech accelerates. If yields rise, tech compresses. 2. Chips. AI. Earnings. Strong. AI software earnings. Chip rally. Weak AI infrastructure earnings. Chip volatility. 3. Energy. Geopolitics. Hormuz tension equals oil spike. Peace signals equals oil drop. 4. Materials. China data, strong China. PMI. Copper lift. Weak PMI. Materials fade. Argon synthesis. Weekly trading character, tone. Bullish momentum with selective risk, primary corridor. Tech plus semiconductors, secondary corridor. Consumer discretionary stability layer. Financials, avoidance zone. Energy plus real estate, wild cards. AI earnings, yields, geopolitics.